Hi, my name is Jamie Miller, Marketing Manager for First National Bank of America. A credit score is a numerical representation of basically your credit health. So it's going to tell lenders what your credit worthiness is based on how you've managed any credit that's been afforded to you or any debts that you've accumulated over time. Your credit score is calculated based on 5 major things: payment history, credit utilization, the length of your credit history, the mix of your credit, and any new credit applications. Your payment history makes up the biggest section out of those 5 core elements that go into your credit score. It counts for 35% of the entire piece, and it basically reflects whether you have paid your bills on time or whether you have any late or missed payments. The second most important piece when looking at how your credit score is calculated is the credit utilization. This one counts for about 30% of your credit score, and it factors in how much of the available credit you're actually utilizing. So for an example, if you have a credit card with an available balance of, let's say, $5,000, and you used $1,500 of that, you would be using about 30% of your available credit. Coincidentally, the 30% mark it's kind of the recommended amount that you want to try and stay under as far as your credit utilization is concerned. Again, that's 30% of your score. So maintaining a good balance ratio is important. The third biggest piece of your credit score calculation comes from the length of time that you have had credit. This is about 15% of your score, and typically a longer credit history will improve your score, but it looks at how long you've held each account, not necessarily how old you are. The fourth and fifth actually both account for about 10% of your score. So the fourth one is the mix of credit. This is more the types of credit or the variety of credit accounts that you have, meaning it could be a mortgage, it could be a car loan, it could be some credit cards. You could even maybe pull in a personal loan into that. The last piece is the number of new credit applications. So this remaining 10% of your credit is basically determined by how many times you apply for credit. And applying for credit, again, same things as your credit mix. It could be a car loan, it could be a credit card, it could be a mortgage, it could be a personal loan, all of those things. Regardless of whether you are approved for that line of credit or not, that will factor into the remaining 10% of your score. So how do you establish credit? Establishing credit can seem a little scary, but it doesn't have to be. There's so many different options out there. I think one of the easiest ways to establish credit, especially if you're younger, and you know someone who has good credit history, who always pays their bills on time, preferably a family member, but I guess it could be a friend too. You can ask them to make you an authorized user on one of their credit cards. Now you have to be very, very mindful, because if you add somebody as an authorized user to your credit card and you miss a credit card payment, you have to understand they don't have any positive credit to help offset that. So you could really hurt their credit score. Another good way to establish credit is to check out different banks or credit card companies that will offer something that's called a secured credit card. Basically what that is you will put down collateral, in essence, for that credit card. Collateral being money. In most instances at a bank, what would happen is you would open a savings account that would be tied to that credit card, and you kind of get to set your limit, right? If you want to do a $1,000 credit card limit, you can say, okay, I'd like to open a $1,000 secured credit card. And what the bank will do, not all banks offer this, but the banks that do, they'll take that $1,000 and they'll put it into a savings account that virtually is locked. So you don't have access to that $1,000 besides through the credit card that you have. And then you have to make your monthly payments just like it was a regular credit card. The $1,000 that's in the savings account will never change. That will always stay $1,000. And basically what that's doing is you're telling the bank you're responsible. And if you're not responsible, they have the collateral sitting there to pay off the balance of the secured credit card if you were to default. Now, if you default on that, it's going to hurt your credit score significantly. But over time, if you start to use credit cards that are like a secured card, then you'll be able to establish a little bit of a credit card history. So now you can apply for a normal credit card. That maybe there's an annual fee to it. Just make sure you pay everything off on time. So what are some ways that you can improve your credit? With credit being as big of a decision-making factor as it is for lenders, we often get asked, how do I improve my credit fast? Well, the unfortunate news is there really is no magic number for how long it's going to take to improve your credit, but there are definitely some things that you can do to help gradually build that score up. Make sure you're continuing to make those payments on time. Even if you can only make the minimum payment, making the minimum payment on time is better than waiting to make a larger lump sum payment late, right? So it's the credit history, it's showing that you can manage all of the debt or all of the credit that's been given to you in a timely manner. So be consistent with your payments. Going back to a secured card or a higher interest rate, low limit credit card is also going to help you with building credit. But really at the end of the day, it's time. It's hard work. It's staying committed. Even though you may not see your score go up, know that what you're doing is working. So we've talked about credit score. Where do you find it? Well, there's a lot of different places that will give you your credit score now. Places like Credit Karma. There's your annual creditreport.com, which is sponsored by the federal government. So all of these places are places that you can potentially get your score and also your actual credit report. So when you're looking at improving your credit score, maybe just kind of gauging where your credit is at before you apply for a loan, it's important that you look at your full credit report. So things that you should look out for on that credit report is really verifying that the information on there is correct. First name, middle initial, last name are spelled correctly. Make sure that your birth date is right. Current address, previous address, even employment history. Making sure that those things are depicted the correct way on your credit report is going to help. Really pay attention to the accounts listed as credit accounts. So any credit cards you have, make sure that they're showing up appropriately. Not all credit companies report to all three of the main credit bureaus, which are TransUnion, Equifax, and Experian. But if they do report, make sure that the data is accurate. Your balances are right, your payment history is depicted the right way. That will also kind of show you whether you're meeting the payment history requirements, whether you have any 30-day past dues or anything like that. Another good thing to look at is credit inquiries. That'll show up on your credit report. So there's two different types of inquiries. There's a soft inquiry and a hard inquiry. Soft inquiry typically doesn't have any impact on your score. That would be, when you get the credit card offers for the you've been approved and you didn't apply for a credit card, that's because they've done a soft pull on your credit. Those will show up on your credit report as a soft pull. Then you have a hard pull, which would be you actually went somewhere and applied for credit. That's going to show up as a credit inquiry as well. So making sure that you don't have too many credit inquiries on your report that you didn't request is a great place to start. You don't want somebody opening credit in your name that you were unaware of. So watching your credit report will show you that. The other thing that you can look at on your actual credit report is public records. You will find anything like financially related legal matters such as bankruptcies or judgments. Any negative public records can also show up on your credit report. So making sure that there's nothing there that you didn't expect to be there is a great place to start when you're really looking at your credit, whether it's to establish credit or improve credit. You still have a credit report. You may just not have a score if you haven't established it yet. So looking at all of those things is going to be crucial to helping you get the best credit score you can which then ultimately is going to help you obtain the best types of financing at the lowest interest rates possible. If you are interested in learning more about topics such as credit, feel free to visit us online at www.fnba.com/blog.